Hello everyone, Joe Vitale, Vitale Wealth Management here with this week's Gradient Investments Market Update. All information is gathered as of the week of September 23rd, 2025. Let's get into the week in review. This week, major indices finished the week higher with the NASDAQ leading the way at 2.22%, reaching an all-time high. Last week, the S&P also gained 1.25 and the Dow added 1.1. Now, internationally, the emerging markets, which is the MSCI, rose 1.2, while the developed markets, the EFA, fell 0.18. We have been seeing the emerging markets and the international markets, the EFA, developed markets, grow very well this year. So we're making some shifts into international stocks. So we want to make sure if you're not in there, give us a call, make sure we're doing that. Also, small cap stocks have continued their rally this year on the back of the Federal Reserve interest rate cuts and expectations for further cuts. The Russell 2000 was up 2.19% for the week and now 10.88% for the year. So we do have that G33 portfolio, which we've been hoping that, has been a laggard for a while, but we should start to see the headwinds and that should start to do pretty good now. On the economic front, Federal Reserve Open Market held a two-day meeting last week with an interest rate decision and a press conference that followed. The Fed cut interest rates 0.25% to an effective federal rate of 4%. We knew that 0.25 was coming, hoping for 0.5%. We should see another 0.5% yet by the end of the year. We definitely need, because the job market has been crippled a little bit. It's been slowing down, so we need the rate cuts. Hopefully it's going to spur everything with the economy as well as housing as well, because we're starting to see that a little bit. Economic release upcoming, another busy week for economic releases with preliminary S&P Global PMI release on Tuesday. Current expectations are that the composite to remain in expansionary territory above 50. On Thursday, so tomorrow, the final Q2 GDP is set to be released, as well as durable orders, which will give investors a glimpse into corporate orders and tariff impacts. Then on Friday, the 26th, the Fed's favored inflation gauge, the PCE, will be released with expectations of 2.8% for headline and 3% for core PCE. Now, of course, this week, yesterday, as an example, the market was opening green and everything. Then Jerome Powell decided to talk about how his concerns were, and of course, we finished in the red. So anytime the market, you just never know what's going to happen. That's why I say hold on, it's going to be a volatile ride. But we're doing good this year, right? The S&P is up probably 10 to 12% this year. We're starting to see growth as well, so everything's going in the right direction. Talk about market outlook. The Fed made the decision to lower the benchmark interest rate last week, and based on further expectations as of September 22nd, there is a 91.9% probability of the Fed lowering that rate again in their October meeting, and a 77% they'll be dropping another 25 basis points in December, which could mean 3/4 points in 2025. I think it's a little late for that. There should have been more. Historically, a dovish monetary policy has been a tailwind for the stock market as it lowers borrowing costs for corporations. Just as important, it lowers borrowing costs for consumers and allows the ability to have lower interest payments on loans, such as credit cards, auto loans, which can help boost economic activity, of course. Which is also, of course, we're waiting for, I think once we start seeing interest rates come down for mortgages, it's definitely going to spur the economy for housing, because people are the rates are so low right now, they're not going to want to get off of that, and then we're going to see more inventory, which means more competition, which will probably lower the prices a little bit. Recent activity, there was trade activity in the Gradient G50 portfolio as follows. They did sell KVUE, and they bought WFC. Means not a whole lot, but of course it's just actively managed every quarter. We want to rebalance as we need to. Stocks in the news. General Mills, which is owned in the G50, reported revenue in line with expectations with better operating income and EPS than analyst estimates. The company reiterated their full year guidance, but remained cautious on the EPS and organic net sales for the year to come. So for the week, the shares were higher, 0.86%. Talk about NVIDIA. Now, NVIDIA is owned in the Core Select as well as the G33 portfolio. This leading AI GPU company announced a $5 billion stake in Intel, making NVIDIA the largest shareholder of the company. The pact includes plans for the two companies to jointly develop PC and data center chips, but shares were down 0.65% for the week. NVIDIA, as we all know, has been just huge in the last couple of years. They continue to do well. So they're part of the core select and the G33. We're hoping to see the small caps, and they've turned into much bigger cap actually. But the small caps continue. I think if the rates start to come down and the market does good, we're going to see the G33 portfolio of the small caps do a lot better. That's it for this week. Thank you so much for being part of the Vitale Wealth family. If you'd like to get a hold of us, you know the number 855-756-5700. Visit us at vitalewealth.com. God bless you. We'll see you again next week.